Hello everyone, welcome to the Ichimoku Charts.com daily analysis for the S&P 500 for Tuesday, November 20, 2012. Well, the continuation of the trend to the upside today, and the candle has made a higher high and higher low. A small bodied candle, however. In previous days trading we had a very large bullish white body candle with the buyers in control and showing very strong commitment taking this market higher. Today a lot of that momentum has disappeared, and it's little wonder because the market really did a lot of work yesterday, and markets do need to have a bit of a rest when they do that much work. It's not surprising that the buyers have only made a very small amount of net bullish progress on the day between the open and the close. It does set the market up for a potential change of trend, but if we look at where the market closed in relation to the range, it's closed up towards the high and very close to the high, suggesting that the buyers have closed with control of this market, even though they've only made a very small amount of net bullish progress. And what's happened throughout the trading day was that the sellers gathered some strength, traded down to the 1378 level of previous support and resistance, and has found support down there once again, with the sellers losing commitment down around that level and the buyers coming in to close this market up with them taking control. It does set the market up as a potential type of pattern, a hanging man pattern, not quite perfect, and also just a one candle or two candle uptrend, so not a terribly significant potential reversal at this stage, and not a terribly strong reversal. And basically the reason why these hanging man patterns are potential reversals is because of the very small body and the buyers making a small amount of net bullish progress, whereas previously they made a very significant amount. But the problem here is, as I've already mentioned, that the buyers have closed with control of this market, and that does suggest the sellers don't really have any strength in this market. Crucial to this market really is this 1378 level of support, and just below there the area around the Tenkan-sen, which is trading at 1372, and this area at 1370, which was previous support and resistance as well. Now if we look at the Fibonacci extension, significantly the market has maintained its close up above the 161.8% level, and that does suggest that this market may rally to higher levels, and the next level that we have based on Fibonacci ratios is the 261.8% at 1409, so above that 1400 level. It's also above the Kijun-sen, so the market will encounter some strong resistance before it trades up to that level. Looking at the Fibonacci retracement here, we've seen the market test once again just beyond the 50% level and rejected from there, closing just at that 50% level around 1388. So an important area of resistance. There is potential for a change of trend because of the loss of momentum by the buyers in terms of net bullish progress. But we do need confirmation of that change of trend, and that would mean the market taking out the low of the current candle with a lower high and a lower low. Now in terms of Ichimoku, we have a bearish market in the long term and the medium term time frames by trading below the cloud and below the Kijun-sen, this pink line here, and that Kijun-sen is pointing flat. Price action is being attracted back towards there, and that's why we've seen this trend continue up. So whilst that Kijun-sen remains flat, there still is a possibility that this market may rally back up towards that flat Kijun-sen. Now the market will interact with this zone of resistance extending to 1390. We can see these 3 or 4 candles here where there was strong rejection from around this area, and there is a possibility we could see that rejection once again. But if the market does break up above there in a bullish manner, then we could end up quickly trading to around the 1400 level, and that will be a very strong area of resistance. Just above there, as I've already mentioned, the Kijun-sen is trading around 1403, and that will offer itself as strong resistance as well. Significantly in the short-term time frame, the market has closed up above the Tenkan-sen, and the Tenkan-sen had been pointing down quite sharply, reflecting this solid downside momentum we'd seen in this market in the recent past. Generally, a Tenkan-sen where we have very solid downside momentum acts as strong resistance to the market. Here the market is traded up above there and closed up above, so that could be significant, and it may suggest that we could see the market test up to around the 1400 level. So we are getting some conflicting signals. The Chikou span is below the corresponding price action, so it's confirming what we're seeing in the higher time frame, but we are now seeing some buying strength coming into this market. With these conflicting signals, likely that the market will rally towards the 1400, and then we could see rejection from there and the market sell off once again.